Hello everyone and welcome. My team is Ahmed ElSayed and Mariam Reda and myself, Ahmed Mahmoud. Our presentation today is about the impact of behavioral biases on investment decision making. We'll start with the introduction. Behavioral finance assumes that investors are freer from emotion. Behavioral finance assumes that investors are normal human beings that are not completely rational and can be biased over behavioral elements. We have 5 biases. The first one is the overconfidence, which assumes that investors see that their judgment is better than the judgment of others. The second one is the representativeness, which assumes that a certain pattern will be repeated and continue to happen in the future. Then we have anchoring, which assumes that investors see that they use certain information from irrelevant or pre-existing information and take a decision based only on that information. And the fourth one is the loss aversion, which assumes that investors prefer to avoid a loss than to acquire a gain. And finally, regret aversion, which assumes that investors fear taking decisions to avoid regret and to not admit their mistakes. We have investment decision making, which is built on the principle of trade-off between risk and return, which means the placing of funds today to generate revenues in the future form of income flow or capital gains. Then we have 2 objectives. The first objective is to examine the impact of behavioral biases on investors' investment decisions in Egypt. The second one is to determine the key behavioral biases that affect the investment decisions. We have 5 hypotheses. First one, representativeness has a significant impact on investment decisions. Overconfidence has a significant impact on investment decisions. Anchoring has a significant impact on investment decisions. Loss aversion has a significant impact on investment decisions. And finally, regret aversion has a significant impact on investment decisions. Then we'll move on to our methodology. We have collected our primary data through Google Form surveys from 205 Egyptian investors. And this data has been analyzed through the Smart PLS software. We have the independent variables or the 5 biases, and the dependent variable is the investment decision making. For our results, we have found that there are 3 of the 5 biases are significant. The significant relation between overconfidence, loss aversion, regret aversion, and the investment decision making, as the significance level is 5%. For our conclusion and recommendations, the Cronbach alpha reflects the good reliability of the investment of the question used in the questionnaire, as it is ranged from 0.560 to 0.773. And according to the past analysis, the researchers have found that there's a significant impact between overconfidence, loss aversion, regret aversion, and the investment decision making, and found that the representativeness anchoring have an insignificant impact on investors' investment decision making. The financial intermediaries have to understand the effect of the irrational behavior of the investors and help them to overcome these biases to have better financial performance. We also have another recommendation for the Egyptian investors, and it is to consider their investment decisions carefully, while not worrying too much about their previous losses, as this affects their investment performance. And they also advise to limit their regret by avoiding holding on to losing stocks to limit their losses. And finally, limiting their confidence to a logical extent for good financial performance, while also being helpful for forecasting future trends. And finally, we would like to express our deepest appreciation to our supervisor, Dr. Marwa Maghawry, and TA Asra Muhammad for their understanding, encouragement, and support. And a special thanks to Dr. Dua Ayman for her effort with us with our statistical presentation. Thank you.